Hey, my name's Jason Nicholson and welcome to my YouTube channel. In this video, I want to talk about a buy-to-let lender that has got some good rates. They cut rates, but also here is why I want to talk about this, because they will lend you 80% loan to value. Now, this year has been difficult for a lot of people with valuations. I've had about 6 valuations so far this year, and about 4 of them have come back lower than what I hoped. Down valuations, we call those. And that's because there's a lot of uncertainty in the market. Is the UK going to go into recession? If we go into recession, unemployment invariably would then go up. Does that then mean that we will get house prices going down? We've also got that big stamp duty increase, and the expectation is that that will slow the market massively for the next 9 months. And so potentially that could mean that house prices go down as well. And we've got Rightmove data that says there's so many new listings coming onto the platform, there's just not enough buyers on the other side to match up with that. So this gives you an option if you feel you might get down valued, or maybe you just want to release a little bit more equity, because there are some cracking deals around at the moment. So before we jump into this, if you're new around here, do make sure you subscribe to the channel over there and make sure you hit that bell notification. We're on the way to 43,000 subscribers. Thank you to everyone that subscribes. And let's get some more views on this video so people are aware of this. Smash like, tickle like, do something to the like button, whatever it takes, because that really helps with the YouTube algorithm, and I really appreciate everyone that does that. So look, what's going on? Well, the buy-to-let market is a little bit slow at getting competitive. You see, residential mortgages, about 2 weeks ago, daily we were making videos on lenders cutting rates. You had NatWest, you had Nationwide, you had all of the lenders basically were cutting rates. Buy-to-let is not so competitive, and the rates are often a little higher, or you get rates that are really quite low. For example, the mortgage works, but then you get quite high fees on that, which is how they make it all stack up and look like it's going to work. Now, on a buy-to-let mortgage, the numbers have to stack up. If you don't get the numbers stacking up, you're not making enough rental income, or you don't have enough equity in the property, you can't get a loan. And a standard buy-to-let mortgage is around 75% loan to value. That's what you get from most lenders. But this lender's called Suffolk Building Society. Before I checked this, I'm in Surrey, so I googled, is there a Surrey Building Society? Because every other county seems to have one, but we don't. Anyway, these guys are Suffolk. Building Society. And these guys will lend you 80% loan to value. Now that's good, as I said, because some people are getting down valued at the moment. So this would allow you to get a lower valuation if you didn't have a great big chunk of equity in that property and still borrow the money. So potentially that's good. So they've got 2 deals that I want to talk about here. One is for buy to let, and one which I don't see as common is for Airbnb deals or serviced accommodation deals. So I'm going to talk about that rate as well. So on a buy-to-let basis, let's have a look what these guys have got here. So they will lend you 80% loan to value, which is more than most people. So that's pretty good there, meaning you need 20% equity or 20% deposit. These are on 2-year fixed rate deals, and the rate on this is 5.45%. Now, don't make the comparison here that rate is significantly higher than you'll see on a residential mortgage. That's normal. Residential mortgages are cheaper. As I said, there's not as much competition, and that's why buy-to-let mortgages can be more expensive. The fees on this aren't too bad as well. I had to really dig around on their site to find these. They're £999. So they're not one of these 3%, 4%, 5% sometimes I see deals with. I think the other day I did a video where the interest rate was 2%, but the fees were 7%, right? It's none of that, which is good to see as well. So this is a good option. And if you're a buy-to-let investor, I mean, if you get stuck, it wouldn't be my first choice. This wouldn't be my first choice, but it could be my second choice if I had another lender that maybe it didn't work out and the numbers didn't stack at 75%. And then I could go to this lender and say, look, I've had a valuation. They'll obviously want to do one as well, but it's easier if you've just had a valuation to get a second valuer to give you a close enough valuation to that. And this could be an option, and it could keep some people in the market that are struggling with deals at the moment. So what about the Airbnb deal? It's not specifically Airbnb, but it's a serviced accommodation deal, which we don't see many of. Again, 80% loan to value. So good, decent lending there, which is what we want to see more of. And they'll have a 2-year deal there, and it's exactly the same basically. It's a 2-year deal. It's 5.45%, and the fees again are $999. Now, there was someone that commented the other day that was saying about they want to make their property into an Airbnb, and you can do that. But you must notify the lender. It's really, really important that you just don't do that, because you could be in breach of your mortgage. Now, if you are in breach of your mortgage and you get found out, they can call in that mortgage very quickly, and you would get in an absolute nightmare then, that you wouldn't be able to pay off the mortgage loan, and you'd struggle to get another lender quickly to lend you the money. So it's very important that if you're going into buy-to-let or serviced accommodation or something like that, holiday lets, that you get the right type of mortgage. This time, it's all the same, but you'd need to apply for the right one. So you don't want to go for the buy-to-let mortgage, because clearly the terms and conditions are going to be different here, and they're going to look at different factors and what your expectations are on rent when they look at this. And the Airbnb one, they're going to expect a higher income from that on a monthly basis. That's why you run Airbnb, to get better cash flow. Now, if you want to know a bit more about how to increase cash flow and do this kind of stuff, then we do have a program called The Fundamentals of Property Investing. Thousands of people that watch this channel have taken a copy of that. It's a fixed price, one-time payment of just £20. And in the description, I'm going to link to that, so you can grab a copy of The Fundamentals of Property Investing. It will help you buy property below market value, so you can get great deals. We'll talk about auctions and how to source properties. It'll also teach you how to add value to a property. That's very, very important, that you buy a property, you add value, that increases your equity. And then we'll talk about how to get high cash flow. Maybe you make it an HMO, maybe you just do a normal buy-to-let, or maybe you do serviced accommodation like we're talking about here. So do check that out. Everyone else charges thousands, we charge you 20 quid. Can't say fairer than that. Do make sure you like the video while you're here. Subscribe to the channel, please. And do check out all the other content as well on the channel, including this video right here.